There we are. Right, here we go. Well, good afternoon, race fans. About a week or so on from my last Trading 212 video, and here we go. How has it been for the last week? Well, I'll tell you how it's been. It's been pants. It's been rubbish. Look at that. First time my portfolio has been in the red as a whole, down 0.5%. Now I had huge growth on this, and it has taken a proper dive. There we go. Since we last spoke, had a big shoot up because I invested a little bit more, but you can just see what has happened to it ever since then. Obviously, I am the haphazard investor. This could be exactly why I would say more luck than judgment, not this last week. So check out my previous videos on my channel for how it's been going so far, to explain how I've got to this point. Now, not a lot of tips bouncing around my normal sources, and that is TikTok or YouTube. So in essence, I haven't done a lot of trading, but this video will prove that actually there's a couple of points that I have got to prove from there on in. Now, just a quick glance over it. Yes, I am downloads. I believe that I am still I still gained overall. If I look at history, it should tell me that total return is £15.27. So I believe that's what I've actually consolidated by selling off stuff that have been in the green. Going back to how it is at the moment, though, I had it's dragged properly down by the Aston Martin shares that I always say that you're not losing until you've sold. So I'm clinging onto this with dear life and hoping this turns around. But you can see the last week or so, this has just gone down and down and down. And I'm down £11.5 on that, 28% of that investment. AstraZeneca's kind of sat there. Carnival still in the green, but only just. And now these guys in the last 3 months where I bought in, they went up tons. And these are my proper long-term investments, because, well, check out the previous videos and exactly why I bought quite so much of Carnival Cruise Line stocks, about £100 so far, but just clinging on in there with only 2% gain. But I have faith. Editas, now look at these guys. These are trucking along at 29% increase at £7 return. This is just about keeping me afloat right now, and I've got to think to myself, well, the reasons behind I've got these shares again in a previous video, but I've got to think to myself, am I going to see more than 29%? Should I be bailing and consolidating that win there? Gilead, however you want to say it, Sciences, and Modena, similar reasons why I'm owning those shares, and well, not fantastic. Tesla, well, I've been in and out of Tesla like well, I could give you some rude gestures, I could give you some innuendo there, but I'm not going to. In and out of Tesla all day long. And then I bought back into Tesla recently because I kind of bought out and they hit $1,000 a share, and I sold out on a gain, and then I've sat out, and then they've just gone up and up and up. Some say I shouldn't have sold out when I did, but they hit an all-time high at $1,000 a share, but they've just kept on going. It now at 1,365. Now, to be perfectly honest, yes, since I bought in, they've stayed pretty stable. I think the last few days, like 43 pence. I haven't got a great deal of money in there, but yeah, they've. I'm just going to hold on to those because I've got a real. Essentially, I sold out on the stock of those, and then a few weeks later they announced their earnings reports, and they're actually in profit, so they shot up, and it's just growing. Some people even mentioned a $7,000 share cap on these. In this market, and I'm no expert, but well, I'm going to hold on to those. These are, again, they're just kind of trucking along at a decent return. So going back to kind of the one of those videos, well, you can see there you can make a loss. It's a risk. It's always a risk. It's going to return more than an average savings account, but you don't lose money in a savings account. So there's the reward. Also, if you fancy having a loss or a dabble in these guys, check out Trading 212. Don't sponsor me. I get a free share and you get a free share, as you can see from there. If you follow this link, which is pasted below in my videos, open an account. You can trade with no money at all. You get a free account, which gives you basically free shares, and of no value, and you just have a play and you can reset them if you've lost loads. So open an account by all means. Only invest what you can afford to lose, and by the way of tips from me, well, I'm doing it probably every single wrong way that you should, and that's why you're watching, I'm guessing. Watch how I fail is probably what I say. And yep, so check out the Trading 212 link below. Now, going back here, and something that Steve in the comments wrote a couple of videos ago, is the fact that he's tried Trading 212, but their speed of pickup has been pretty slow. Now, I haven't experienced that until this week. Now, let's go back to the history charts, and this bit me hard. Uber. Now, I heard on, what date was it? 6th of July, 3 days ago, Tuesday. So I heard on the morning news that Uber were kind of buying into or going into partnership with, I know they've got Uber Eats, but another food style something or other. Well, there you go. That alerts me to the US market opening in 3 minutes time. So yeah, I thought actually that news is big. The market being reactionary and like just reactions and overreactions. I thought that's the time to buy into Uber. So I bought into Uber. But the thing is, because it's an American market share, and that alarm actually hits at the perfect time, is that their market, the American market, doesn't open till 2:30 GMT. So I thought you can buy shares on here, and then you place a share order. You buy it at this price, this much you want to invest in it, and come the market open, then it pitches in there and buys you the share at that price. However, and I don't know if this was what Steve was on about, but this is where the problem came, because everybody else did exactly the same thing. Let's see if I can find Uber for you. Let's search it. Because what happened Tuesday when the market opened at 2:30 GMT is it rocketed right there. Look, okay, so what happened is, and this is a lesson to everyone, is that I placed an order to buy somewhere around about here, okay, and then all of a sudden when the US market opened, all of these apps and all of the market traders out there, they were trying to settle their orders that they'd placed, and what happened was it went bosh up here, okay, and it was still trying to process my order. Now, Trading 212 had a massive flip out, and it actually cancelled my order. Then it reinstated my order. Then it cancelled. Then it reinstated it. It had a massive flip out. And I don't know if it's just because so many people wanted to do it, but it didn't buy my share until it got to about this point here. So in the end, I think it only invested. I was trying to put about £20 on onto trade, but in the end, it was like 30 pence. So and throughout that day, all it did was really kind of, once it dropped down a little bit, it kind of stayed where it was. Obviously it's climbed back up, and there was no way of knowing that one, but yeah, so that initial kind of increase by was that about 10%, I was hoping to catch, but so was everybody else. And as Steve mentioned, I think in the comments, this could be what he was pointing to, is the fact that they're pretty slow to react when you want to place a trade that is very time orientated. So I really did lose out there. I think I binned off the stock at about a couple of a pence loss, just so that I could reinvest it anywhere else. Yeah, so essentially that's been pretty much, it's been pretty quiet with my portfolio kind of dangling around the sort of +1 -1% area, and I haven't really had too many new tips. So that's me basically saying, there we go, we've gone from entire great times, more luck than judgment, to not so much luck and no judgment at all. Probably gets you exactly where I'm at now, which is in the red. It's not a great deal, and I really do desperately need the Aston Martin shares to turn around so that I can at least somehow, I don't really want to consolidate those while they're in the red. But yes, there we go. But the big question for me is the Editas at 31%. It's going up and up and up, and if you look at that, it's fantastic. I don't know if any news has been released about these guys, but yeah, got to keep an eye on that, because it could very much go up and then go down. However, there's a new theory I want to try out, just to round off this video before I mumble off, is the fact that I read something the other day, and that is, it's called the free ride home. And I can explain it, I'm trying to explain it to, if you put an investment into something, you buy some shares, you make an investment, and it grows, it's basically putting your investment in, say for instance £20 investment in, or £100 or whatever, and it's getting to the point where you are able to place that trade, it increases, but then you remove your initial investment, but you leave your gains in there, so that your initial investment is then placed somewhere else, it's protected, or even reinvested in, but what you're left in that stock is your gain. and then you set a loss limit, so of about 10%, so that you're never going to lose on that trade ever. Because the worst case is the game that you kind of where it's at, where you take your investment out, it'll only ever you set a stop loss, which means it'll automatically sell at minus 10%. Okay, you'll still have that chunk there that you've gained, that chunk there. So you put that much in. Okay, it goes up. You take the initial investment out. You're left with this much, and the worst case is it will drop to there and it automatically sells out. But you're never at risk at losing everything. So that's the free bus ride home. I'm going to try that. I don't know on what yet. I could try it on the Editas medicine maybe. In fact, I might do that. I might see how far it'll go, and then just take my initial investment out and just leave a little bit in. Of course, if you take that whole chunk out, you're going to gain less because you've got less in on it, but you're not going to lose. So, does that work into the haphazard investment, or is that a little bit too cautious? Could be a little bit too cautious, but I'll let you know what happens. Anyway, I'm Neil. I'll catch you up in a week's time, hopefully with a little bit more going on in my accounts, and hopefully in the red. But either way, I'll let you know what's going. Don't forget, if you want an account with Trading 212, please use my link below. Like recently, 2 people did. I gained £20 worth of shares, and so did they. And you'll get the same thing. And you can always trade for free by using their simulator account before you don't ever need to put some real money in. I'm Neil. Haphazard investment, more luck than judgment. Thanks for watching. Check out my old videos. Give it a like, subscribe. Bye bye.